up, friends? It's May 11th, 2020, and I'm doing my market update today. So what I want to do is kind of go through three different. I'm going to refer to my notes again because I want to make sure that I get these numbers right. But first of all, there's going to be a 10% long-term unemployment rate in America, and just a little while ago, we were at the lowest unemployment rate we've been for a long time, 3.6% before February. And now that was the lowest in 50 years. So now it's up higher, even higher and higher. So now it's up to, oh God, over 20%. Like if you look at this right here, and this is from the Washington Post. I'm not making this stuff up, just so you know. The Washington Post is actually saying that it surpassed 20%. I'm saying it's closer to 30% because there's over let's see, over 34 million people unemployed, and there's 7 million that haven't been reported yet. So there's a lot of people out of work. So anyway, also just so you can see here, the feds are propping up the market. What they're doing is they're putting all this money into businesses. There's $4 billion, trillion dollars in the businesses, and they're quantitating east. I can't even say the word today. It's been one of those days. Anyway, they're buying out bonds from the banks. They're putting all this money into like the airlines, $52 billion in the airlines. That keeps the airlines going probably through October. Then they'll probably be laying off people. I just read an article where Warren Buffett sold off his airline stocks for a loss of 50%. And he says he's not buying any more stocks. So that should tell you something. With this 70% of businesses won't be hiring again till like January of 2021. They'll be just keeping their doors open as much as they can. And there's really, with the market being propped up by all this money infusion, eventually they're going to stop putting the money in. But anyway, the banks are paying about 0.25%. And the best way to safety your money would be probably some form of other alternative, but the 10-year Treasury bond's paying 0.64%. Wow. And that's what they based everything on, is that. And there's really not much you can do. So once the government stops putting all this money into the market's going to go boom, down. And they're looking probably sometime in the fall. And so it's a good time to go to safety at this point. And I have some ideas if you want to talk to me or talk to somebody. Anyway, okay, and the third thing is phase 4 of this virus thing is going to be long term. It's going to take a long time. They're going to start putting money into like building bridges and roads and stuff. That'll help for about 6 months because they'll be hiring people to build the roads. I mean, this happened back in 1932, 1940, during the Deep Depression. And what they're going to do also, they're going to hire like 200,000 contact tracers. And what they're going to do is they're going to go see everyone that was in contact with the persons that are infected. So they'll be going over here and over there and over there and trying to figure that out so they can isolate the people that have the virus. And they're still saying by the end of the year, in December or the beginning of January, they'll have some form of a way to eliminate it or help eliminate it. But I don't know. It doesn't look so good. So safety is my word for the day. And all the stuff that I'm showing you here is either from the Washington Post, USA Today. This is not stuff that I'm making up, just so you know. But if you need to talk to me, just send me a message or call me at 440-334-6088. Thanks.